Hey everyone, welcome back to the market review. Today's going to be the 17th of November 2023. So there's actually been a lot that's been going on this week. Obviously, the focus would be on the inflation number. So let's talk about that inflation number first. So we have the US CPI numbers, and the US CPI numbers has come in below the market's consensus. So it has actually dropped down to 3.2%. From 3.7%, the consensus was 3.3%. Now that's a drop of 0.1% below the consensus. Obviously, not just from that, we also saw the monthly growth was pretty much at 0%. So we actually didn't see any growth in inflation from the monthly changes. The core CPI in the US has also come off a little bit. And overall, it was actually a sign that inflation in the US has kind of cooled off, right? And we also have the PPI numbers from the US, which is released the next day after the CPI. It was also 0.1% below the consensus. So overall tone for this one here, both on the CPI side, the consumer side, as well as the producer side, the inflation has actually come off a little bit. And that's not all. What we saw in the market was pretty significant. So let's take a look at a few currency majors that I definitely want to focus on. Let's first take a look at the Aussie USD first. And for the Aussie USD, this one here has stayed true in its range. We still have that support at 63.50, 64 cents. And in terms of resistance, we're still met by 65 cents. Now, if we remember from 65 cents, that's basically been the resistance from August, and that's what's been capping the market so far. Now, obviously, the rally from that CPI softness on Tuesday, that really pushes everything up, okay? And in terms of Aussie USD, it pushes it all the way up to 65 cents. And from there on, we saw a little bit of a correction, which is technically normal. And in terms of the correction, I'm going to switch onto the hourly time frame just to show you a little bit of an illustration on what that correction is. So let me just measure for you the correction so far. So we have that rally from the initial rally from that softer CPI numbers. And so far, the correction has been at about 38.2%. Ideally, we actually want to see a little bit more drop on this one here. We actually want to see a 50% drop, 50% correction for that drop. And the market is so close to it, so we actually anticipate a little bit more drop to the downside, maybe around 64.50 cents. We do have a little bit of an order block for that level there. I don't expect crazy movement. Today is Friday after all. In terms of numbers for today, we actually have the UK retail sales number, but that's definitely not going to affect the Aussie USD. For now, we have the US retail sales number that kind of lift up the US dollar a little bit, but that's pretty much it. That triggers a correction. But for now, we actually still anticipate a further run to the upside for the Aussie USD. And for a very few reasons, let's take a look at the Ichimoku cloud. We are currently above the Ichimoku cloud. We are basically testing this as potential support. The base for that Ichimoku cloud is also located at 64.50. Now let's shift back onto the daily time frame. So we're looking at this little correction here as actually more of a pullback from that transition above the Ichimoku cloud. So we have transition, the trend has shifted, and this is actually the first transition back above the Ichimoku cloud since August 2023. So August till November, this is the first time we actually see price trading above the Ichimoku cloud on the daily time frame. So we still expect further gains to happen on the Aussie USD. I'm not too crazy on Friday. I don't think we expect a lot of movement on Friday, but going forward into next week, a lot of things have shifted. A lot of these trends have shifted. Now, for the Aussie USD, we have seen the shift. We still have that resistance at 65 cents. Obviously, a market needs to break it, but we should be looking for any potential bounces off 64.50 for the Aussie USD, and we're still looking for that push higher. Another retest of 65 cents is likely going to happen. Now let's take a look at the EURUSD. This one here has also been on a crazy run. Let me just hide the Ichimoku cloud. I don't think the Fibonacci here, we actually don't need that. So the key levels has been broken. We saw that 1.07 has been broken, and then it was retested before that rally up. That 1-day candle that you see here that runs up from the support area all the way to resistance area, that was just on the back of the softer CPI numbers. And from then on, we saw what happened this week. It was pretty lethargic. Everyone is just trading on Tuesday. I don't think anyone is actually trading on Wednesday and Thursday. And we actually saw a little bit of a drop in volume for trading on Wednesday and Thursday. Friday, we would expect the same to happen as well. So we do have a little bit of resistance. That's going to be between 1.0850 to 1.09. Now, very similar situation with the Aussie USD just now. Let's shift back into the hourly time frame for the Euro USD. This one here, we're testing the Ichimoku cloud. Price is pretty stable, and for as long as price is trading above 1.08 to 1.0825, this are going to be the level that we expect price to bounce off from. For as long as it doesn't trade below 1.08, I think we are still going to be looking for further gains to the upside towards 1.09, and potentially even breaking 1.09 comes next week. Okay, now the stronger one is actually going to be the pound USD. Obviously, for the pound USD, there's going to be an added bonus for this one here. The drop in inflation was actually more than 2%. It actually came in below the consensus. So that drop in inflation was actually a little bit more of a good news for the sterling here. And we saw the same situation here. It was sterling pushing up higher, breaking above that Ichimoku cloud. Currently, it's kind of pulling back a little bit. But this one to note, has broken through a lot of resistance. So we actually broke through 1.23, 1.24, all in one single candle on one single day for the pound USD. So this one here, very similar situation with the Euro USD and the Aussie USD. Whatever move you're looking at here, this is a perfectly normal correction for the pound USD. As a matter of fact, it might even pull back all the way down to 1.23 and will still be considered as a normal retracement. Currently, it is holding out at about 38.2%. Ideally, we actually want to see this level holds. We actually don't want to see the drop below 1.2375, because if we see that drop below 1.2375, then we should expect the next support to come in at 1.2350 and 1.23. But for now, yeah, intraday wise, ideally we actually don't want to see this close below back below the Ichimoku cloud, at least not on the early time frame. So currently we expect price to be holding out at 38.2%. But yeah, not expecting crazy movement. Again, we still have that UK retail sales number from the UK, obviously, and that's still going to affect the sterling. Now, the last thing I want to talk about for this week for review is actually going to be gold. Now, for gold, this one has bounced us off that 1930, 1950 area. Now, obviously, by the looks of things, it does seem like, oh yeah, you know what, gold is pushing up higher and stuff like that, but this is not quite the case. This one here is like, I expect this one here to be more of in a range bound market condition. It's not quite clear on the daily time frame here, but if I were to zoom in onto the hourly time frame, let me show you the resistance areas that we are actually keeping an eye out for, and that would actually be the buy side liquidity that was formed at about 2 weeks ago. No, not 2 weeks ago. It was last week's Monday, which is on the 6th. And there was a little bit of an order block. And that's basically where price of gold is being capped intraday wise right now. So you can see that the difference between the buy side liquidity as well as the order block. And that's currently capping the market from further progress. Now, if this proves to be a stronger resistance level for gold, now intraday wise, if it's able to push lower back below 1970, then it would likely transition back back towards the 1950 range. So I expect a little bit more of a range bound market condition to happen for gold. Not really expecting this one to start trending. We actually, well, it might, but we just don't have the evidence at time of recording. So I might probably have to give you an update on Monday next week in our outlook. We might be able to find and filter out some of the movement here, but for gold at this point in time, it's still going to be a little bit of a tough call, unlike the Aussie USD, the Euro USD, and the Pound USD, where we still expect further gains to happen. But for gold, this one here is likely going to be starting a range bound market condition. So that's pretty much it. That's pretty much a wrap for this week. I think the key focus would be that a lot of the trading activities, a lot of the volatility, a lot of the volume happened on Tuesday, and we actually see that drop of volume, trading volume on Wednesday and Thursday. So that's probably why we're looking at a little bit more of a lethargic FX market, post CPI. But again, kind of wraps it up. We should be able to kind of start out a new range for next week. I think a lot of traders are probably just going to wait until Monday to open, and then identify the new range and probably just take more action starting next week. But for this week, today is Friday. I don't think we are expecting crazy trading volume as well today. So just keep in mind, if you are going to be trading today, you might actually find the market is still going to be lacking that volume. The market might not move, and there's probably going to be exaggerated volatility. Typically that happens every Friday anyways. All right, so with that, have a fantastic weekend. Good luck with your trades. I'll see you on Monday.